$367 billion. That's how much wealth is currently hidden in a state with fewer than 900,000 people. You need to know this because while you're paying taxes on every dollar you earn, the world's wealthiest families are legally making their fortunes disappear. I'm going to reveal exactly how South Dakota became the Switzerland of America, and by the end of this video, you'll understand why this quiet Midwestern state holds more billionaire money than most countries' entire economies. But before I show you the proof, you absolutely need to know about a legal loophole that was created in 1983. A loophole that changed everything about wealth in America. This isn't conspiracy theory. This is documented financial architecture that exists in plain sight, and it's affecting your financial reality whether you realize it or not. Meet Eddie. Just like you, he had no idea that while he's paying his fair share in taxes, there's an entire shadow economy operating in one of the least populated states in America. Eddie works hard, pays his taxes, and plays by the rules. But the ultra-wealthy? They're playing an entirely different game. Watch what happens when Eddie discovers the truth about where America's billionaire money actually goes, and why South Dakota holds the key to understanding wealth inequality in this country. Credibility and promise script. 60 seconds, 150 words. Here's what most people think is happening. They believe billionaires hide money in Swiss bank accounts or Caribbean islands, offshore tax havens with palm trees and numbered accounts. But the reality? The world's most effective tax haven is right here in America, in a state famous for Mount Rushmore and not much else. I'm going to prove it to you with documented evidence, financial analysis, and the exact mechanisms that make this possible. By the time we're done, you'll never look at American wealth the same way again. This isn't about politics. It's not about rich versus poor. This is about understanding a legal system that was deliberately designed to attract the world's money to a single American state. Let me show you exactly what I mean. And trust me, once you see how this works, you can't unsee it. This is exactly what's happening to millions of working Americans right now. While you're paying taxes on every paycheck, every investment gain, and planning for estate taxes when you pass wealth to your children, the ultra-wealthy have discovered a completely legal way to remove their fortunes from the tax system for centuries. Not decades, centuries. Let me give you a specific real example without naming names. Imagine a billionaire family worth $10 billion. Under normal circumstances, when the patriarch dies, the estate could face a 40% federal tax. That's $4 billion going to the government. But here's what actually happens when they use a South Dakota Dynasty trust. They transfer their assets into the trust. The trust is irrevocable, meaning they technically don't own the assets anymore. And here's the key. South Dakota abolished the rule against perpetuities. Most people don't realize that in almost every state, you can only pass wealth through a trust for a limited time, typically 90 to 120 years. South Dakota? No limit. Forever. The numbers tell the complete story. According to trust industry analysis, South Dakota holds $367 billion in trust assets. That's more than the GDP of over 150 countries. For a state with fewer than 900,000 people, this directly affects your economic opportunity, your children's future, and the fairness of the entire financial system. And here's the part that makes it even worse. While this money sits protected in South Dakota, growing tax-free across generations, regular Americans are dealing with stagnant wages, rising costs, and an increasing tax burden to make up for the revenue that never gets collected from these perpetual trusts. Let's break down the mechanism behind this. I've analyzed trust law extensively across all 50 states, and what most people miss is that South Dakota didn't become a trust haven by accident. It was engineered through deliberate legislative changes. There are 3 critical components that make South Dakota the perfect wealth shelter. First, perpetual dynasty trusts. In 1983, South Dakota became one of the first states to abolish the rule against perpetuities. This ancient legal principle limited how long you could control wealth through a trust, typically to lives in being plus 21 years, or about 90 to 120 years maximum. South Dakota eliminated this entirely. Your great-great-great-great-grandchildren, 200 years from now, can still benefit from a trust you create today. Second, complete asset protection. South Dakota law shields trust assets from creditors, lawsuits, and even divorces of beneficiaries. The assets are essentially untouchable. They exist in a legal fortress that's nearly impossible to penetrate. Even if a beneficiary gets sued, loses a court case, or goes through bankruptcy, the trust assets remain protected. Third, zero state income tax and confidential reporting. South Dakota has no state income tax, no personal income tax, and trust documents aren't public record. The trusts operate in near-complete privacy. There's no requirement to disclose beneficiaries, no public filing of trust documents, and trustees aren't required to report assets to anyone except the beneficiaries themselves. Each of these plays a specific role in creating what financial experts call the perfect wealth preservation vehicle. Let me show you how this actually works in practice when a billionaire family decides to move their money to Sioux Falls. Now, here's the loophole that ultra-wealthy families exploit, and it's completely legal. Think of it this way. Imagine you have a valuable painting. If you own it directly and you get sued, creditors can take that painting. When you die, it goes through probate, gets valued, and faces estate taxes. If your kids inherit it and then get divorced, it could be split with their ex-spouse. But what if you put that painting in a trust in South Dakota? You no longer technically own it. The trust owns it. You can't be sued for it because you don't own it. When you die, it doesn't go through probate because you didn't own it. Your kids benefit from it, but they don't own it either, so their creditors and ex-spouses can't touch it. That's essentially what's happening here, except instead of a painting, we're talking about billions of dollars in stocks, real estate, businesses, and other assets. The legal framework allows this perpetual protection because South Dakota law treats trusts as separate legal entities with stronger protections than almost anywhere else in the world. The trust can exist for 500 years, 1,000 years, or forever. According to trust industry analysis, the average South Dakota Dynasty trust holds assets worth over $150 million. The largest trusts exceed $10 billion, and the beneficiaries? They can receive distributions for education, health, maintenance, and support. That's broad enough to cover almost any expense while keeping the principal protected and growing. Why doesn't anyone talk about this openly? Because the trust industry in South Dakota generates over $400 million annually for the state economy. It's supported by local law firms, trust companies, and legislators who benefit from keeping these wealthy families happy. There's a powerful incentive to maintain the system exactly as it is. The secrecy is part of the design. South Dakota trusts don't have to register beneficiaries publicly. The financial details remain private. Most Americans have no idea this system even exists. Now that you understand how the system works, you need to see the evidence. What I'm about to show you is documented through public financial analysis, state economic reports, and trust industry publications. It's verifiable and, frankly, eye-opening. The facts don't lie. South Dakota went from having essentially zero trust industry in 1980 to managing more wealth than Switzerland in less than 40 years. This didn't happen by accident. Let's examine the timeline together. We'll look at exactly when the laws changed, how much money flooded into the state, South Dakota's economy as a result. We'll also examine the global implications because this isn't just an American phenomenon anymore. International billionaires from over 50 countries now use South Dakota trusts. The numbers are staggering, and they tell a story that goes far beyond one small American state. Let me walk you through the documented evidence piece by piece. According to financial industry reports and state economic analysis, South Dakota's trust assets have grown from essentially zero in 1983 to $367 billion today. That represents one of the fastest wealth accumulations in any jurisdiction in modern history. The timeline is crystal clear. In 1983, South Dakota passed legislation abolishing the rule against perpetuities. This was a deliberate decision recommended by a legislative task force specifically created to attract trust business to the state. The goal was economic development through financial services. By 1997, the state added powerful asset protection statutes. These laws made it nearly impossible for creditors to penetrate trust assets, even in cases of fraud, as long as the assets were transferred before any legal claims arose. By 2006, South Dakota had zero state income tax, complete privacy provisions, and had become the preferred jurisdiction for dynasty trusts in America. The pattern shows a carefully orchestrated strategy to compete with international tax havens by creating a domestic alternative with all the benefits and none of the stigma of offshore accounts. Here are the numbers that prove this strategy worked. First, trust administration generated over $400 million annually for South Dakota's economy by 2020. That's in a state with a total GDP of $53 billion. The trust industry represents nearly 1% of the entire state economy. Second, employment in financial services in South Dakota grew by 320% between 1990 and 2020, while the national average was 75%. The trust industry created thousands of high-paying jobs. Third, according to industry publications, approximately 100 trust companies now operate in South Dakota, managing assets for families from over 50 countries worldwide. This isn't theory or speculation. This is documented economic reality. And when major legislative changes occurred, the results were exactly as designed. More wealth, more privacy, more protection, and zero state taxation. The evidence shows that South Dakota deliberately positioned itself as the Delaware of trusts. Just as Delaware became the corporate haven through business-friendly laws, South Dakota became the trust haven through wealth-friendly statutes. But here's the most shocking part. This isn't just affecting billionaires anymore. What this means for your tax burden, your economic opportunity, and your children's financial future is something you absolutely need to understand. Because while billions sit protected in South Dakota, growing tax-free across generations, regular Americans are being asked to shoulder an increasing share of the tax burden. The math doesn't lie. Let me explain exactly how this impacts you personally, right now, today. Here's what this means for you specifically, beyond the abstract billions. Your financial reality is affected in 3 direct ways. First, your tax burden is higher than it needs to be. When $367 billion sits in protected trusts, avoiding estate taxes and generating tax-free growth, that revenue has to come from somewhere. According to economic analysis, the lost tax revenue from dynasty trusts is compensated through higher rates on working Americans, reduced deductions, and increased payroll taxes. Every dollar protected in a South Dakota trust is potentially a dollar you're making up for through your paycheck deductions. Second, your economic mobility is constrained. When wealth accumulates and compounds across unlimited generations without ever being redistributed through estate taxes or economic circulation, it creates what economists call wealth concentration. The same families control the same resources forever. This reduces opportunities for everyone else. Your children are competing for jobs, housing, and education against families with perpetual dynasty trust funding. Third, the political influence gap widens. Families with multi-generational protected wealth can fund political campaigns, lobby for favorable laws, and shape policy in ways that protect their interests across centuries. Your vote matters, but it's competing against concentrated perpetual financial power. If this continues unchanged, by 2050, we're looking at potentially $1 trillion or more in South Dakota Dynasty trusts alone. That's wealth removed from the normal economic and tax cycle, compounding and growing, controlled by fewer and fewer families. Think about your current situation right now. Are you paying more in taxes than you were 5 years ago while your real wages stayed flat? Have you noticed housing costs increasing faster than your income, partially driven by cash buyers with family trust funding? Do you feel like economic opportunity is becoming more concentrated among people who already have wealth connections? These aren't coincidences. They're direct results of a wealth preservation system that operates parallel to the economy most Americans experience. South Dakota's trust laws are just one part of this, but they're a significant piece of the puzzle. What this means for your tax burden, your economic opportunity, and your children's financial future is something you absolutely need to understand. Because while billions sit protected in South Dakota, growing tax-free across generations, regular Americans are being asked to shoulder an increasing share of the tax burden. The math doesn't lie. Let me explain exactly how this impacts you personally, right now, today. Here's the good news. You're not powerless. Understanding this system is the first step toward creating change. There are 5 specific actions you can take starting today. Action number 1. Educate yourself and others about wealth inequality mechanisms. Share information like this. The more people understand how the system works, the more pressure builds for reform. Knowledge truly is power when it's distributed widely. Action number 2. Support tax policy transparency. Advocate for legislation that requires public reporting of trust assets above certain thresholds. South Dakota's privacy laws only work because they operate in darkness. Sunlight is the best disinfectant. Action number 3. Vote for representatives who support estate tax reform and closing dynasty trust loopholes. This isn't about punishing success. It's about creating a fair system where wealth eventually circulates back into the economy instead of being locked away forever. Action number 4. Understand your own financial planning options. While you may not have billions, working with qualified financial advisors and estate planners can help you make the most of legitimate wealth-building strategies available to you. Action number 5. Engage in your community. Economic power often translates to political power. Local engagement, community organization, and collective action create counterbalances to concentrated wealth influence. Important disclaimer. I'm not providing financial, legal, or professional advice. I'm showing you the mechanisms and tools that informed citizens use to understand and engage with economic policy. Always consult with qualified professionals for your specific situation. Knowledge is power, but only when you combine it with informed action and community engagement. What this means for your tax burden, your economic opportunity, and your children's financial future is something you absolutely need to understand. Because while billions sit protected in South Dakota, growing tax-free across generations, regular Americans are being asked to shoulder an increasing share of the tax burden. The math doesn't lie. Let me explain exactly how this impacts you personally, right now, today. So now you know how South Dakota became America's hidden tax haven, why $367 billion sits protected there, and how this affects your economic reality. The question is, what are you going to do with this information? I want to hear your perspective in the comments below. Did you know about South Dakota's trust industry before this video? Do you think dynasty trusts should exist forever, or should there be limits? Share your thoughts. Let's have a real conversation about this. If you found this valuable and think more people need to understand how wealth preservation really works, hit that like button and share this video. Subscribe if you want to stay informed about economic systems, wealth inequality, and the mechanisms that shape our financial world. And if you want to dive deeper into how the ultra-wealthy legally avoid taxes, I've got another video that reveals the specific strategies they use that are completely legal, but virtually unknown to most people. I'll link it right here. Thanks for watching. Stay informed, stay engaged, and I'll see you in the next one. What this means for your tax burden, your economic opportunity, and your children's financial future is something you absolutely need to understand. Because while billions sit protected in South Dakota, growing tax-free across generations, regular Americans are being asked to shoulder an increasing share of the tax burden. The math doesn't lie. Let me explain exactly how this impacts you personally, right now, today.